Now, as some of you guys might or might not know, Realty Income stock or ticker symbol LO is one of my largest holdings across my 7-figure portfolio. I own over 2,700 individual shares of ticker symbol LO that pay me north of somewhere around $700 every single month. Now, Realty Income was also one of the first ever individual dividend stocks I ever bought around 8 or so years ago now when I started my dividend portfolio a long time ago. And although I still hold on to Realty Income shares, I did just announce as of recently that I'm pretty much more or less done buying Realty Income just because I think the future outlook is a little bit hazy, but the main reason being that I have 2,700 plus shares, and for my portfolio that seems to be enough. But in this video, I want to go through an article sharing several reasons why Realty Income, ticker symbol LO, might be a smash buy as of right now, and I figured you guys would want to see exactly what we're talking about. So if you either own Realty Income or have ever thought about it, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So like I said, I came across this article. This is from Bella, L-A-K-O-S, from Seeking Alpha. And definitely, if you guys are interested in Seeking Alpha, trying out this website, there's tons and tons of good information on here. Go to my description, click the link, and try it down below. But this article says the reasons we believe you should buy Realty Income now, which just right off the bat sort of goes against everything that I've been saying as of recently. So I wanted to go through this article with you guys and see what Bella has in mind and why Realty Income could be a bias right now. So first off, Bella says, in summary, Realty Income is a REIT that pays monthly dividends supported by cash flow from over 15,450 properties under long-term net leases with commercial clients. O's stock price has declined by roughly 9% the past month, underperforming the broader market by 11%, and we're going to talk about the pullback in this article and why Realty Income could be a buying opportunity. Now first, they say Realty Income is structured as a real estate investment trust or a REIT, and it pays dividends on a monthly basis. These payments are supported by the cash flow from the 15,450 real estate properties primarily owned under long-term net lease agreements with commercial clients like names of Walmart, Starbucks, and many other familiar names. Some of those names, side notes, are names that a lot of us don't want to be in Realty Income's portfolio. As of right now, names like Walgreens or even Dollar General, but I digress. It says in the past month, O's performance has not been particularly strong. The company's stock price has seen a decline of roughly 9%, underperforming the broader by 11% or so. Now, first off, talking about valuation, they say, as mentioned in our introduction, we are going to dividend discount models to value O's stock, but before we start with our evaluation, we have to assess whether this approach is indeed plausible and suitable or not. To use the dividend discount models, the company needs to fulfill certain criteria. Number 1, paying dividends. Number 2, in the mature growth phase. And number 3, relatively insensitive to the business cycle. Is that we believe that REITs are generally not insensitive to business cycles. In our opinion, the firm's strong track record of stable growing dividend payments could also serve as a valuable indication that the valuation method is applicable. The following table and chart illustrate that O has been a reliable dividend payer for the past 3 decades, which is true. The firm has managed to pay its shareholders and increase these payments for more than 2 decades consecutively. Realty Income currently pays an annual dividend of around $3.16 per share, corresponding to 5.5% yield, which is not bad and what may make Realty Income a strong buy opportunity. Now it then says the payout metrics, the AFFO and FFO payout ratios, 75.13%, 78.34%, trailing 12 months respectively, also indicate that the firm is able to cover its dividend payments. Dividend discount model. Now that we have established that the dividend discount model is a suitable method to value O stock, we have to define the primary input parameters, which are required rate of return and dividend growth rates. So required rate of return, the required rate of return, we normally like to use the firm's weighted average cost of capital or WACC. O's latest WACC estimated is 6.2%. Now they then say we have to note here that this figure is highly dependent on the cost of debt, or in other words, the level of interest rates. If interest rates are expected to fall, the cost of debt and therefore the WACC is likely to decline, which might positively impact the fair value of the stock going forward. Dividend growth rate is next. We're going to use a single stage dividend discount model, meaning that we are going to use a single dividend growth rate perpetuity. To come up with the realistic growth rate, we generally like to use the firm's long-term historic dividend growth rate, which is around 3.93% for O. But we can also see the dividend growth has been slowing in the past years. The trailing 12-month dividend growth rate is 2.46%, significantly lower than the past 10-year average, which is something to be concerned about, especially if you are an investor looking for names that offer massive dividend growth like myself. For this reason, we are going to create two cases, one with 2.5% and one with 4%. So the results are, when plugging in these parameters to our dividend discount model, we get a fair value estimate of Realty Income stock between $87.50 and $150, which is significantly above the current price of $57 per share. While the share price of $150 and a dividend growth of 4% may be too aggressive assumption in perpetuity, even a 1% dividend growth in perpetuity would provide us with an upside of roughly 7%. We also have to mention that O has been issuing stocks in the past, diluting existing shareholders and therefore eroding the value of their holdings. This is not taken into account in our calculations, but we need to keep this in mind. They then said also we have to compare the firm's PFFO to PAFFO metrics in bold. With the real estate sector median, we can see that O stock appears to be trading at a discount as of now. Now, for these reasons, we believe that the current pullback could serve as an excellent opportunity to start a new position in O or add to an existing one. But before we can make our final investment recommendation, we have to check the fundamentals on the firm and assess whether the financial performance also justifies this investment or not. So now going over the recent quarterly results. On the 5th of November, Realty Income has reported quarterly results. The company has beaten revenue estimates by as much as USD 70 million, totaling in 1.33 billion, representing a roughly 30% growth year over year. At the same time, FFO has come in at 99 cents or 7 cents below analyst estimates. While the revenue growth is definitely a good indication, the question is now, how concerning is this decline in FFO? Now the answer is, number one, the firm has had a very high occupancy rate of 98.7% with rent recapture above 100%. As tenants include names like Walmart and Starbucks, we believe that O is well positioned to continue on with high occupancy rates and with tenants who are able to pay. The gradual improvement of consumer confidence in the past months also signals that the consumer is getting so much stronger, which could definitely benefit some retailers and of course in turn help O. Now they say the conclusions are as follow. O is beating revenue estimates in the most recent quarter, but their FFO results have come in below initial analyst estimates. The firm remains committed to paying monthly dividends to its shareholders though. These payments appear safe and sustainable based on the firm's operational performance and financial outlook. Based on the dividend discount model, O stock appears to be attractive value. The undervaluation is also supported by a set of price multiples. Based on our analysis, we believe this recent pullback is an attractive opportunity to start a new position or offer Realty Income as a buying opportunity as it sits in the $57, $58 as of filming this video. So even though Realty Income has recovered a tiny bit since the most recent low of $52, it still has a long way to go to be trading in 2020 levels of $78+ per share. Now, I personally do believe in Realty Income longer term, but again, with my position being sort of maxed out and with some of the headwinds that Realty Income is facing as of right now, I personally, like I said, took my foot off the gas, although Bella's article did raise some good points on why Realty Income could be a good buying opportunity as of right now. Now, that being said, if Realty Income does dip significantly from here, I'll probably add into more shares in my portfolio, even though I'm already pretty maxed out as is. So now that we talked about Realty Income and why it could potentially be a buying opportunity, I want to hear from you guys down below. With the Realty Income currently trading still under $60 per share, are you grabbing shares of ticker symbol below? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.